Well, that was the Fed Chair Jay Powell speaking yesterday at the Economic Club of New York. Still with us is Jens Nordvig. He's Exante Data founder and chief executive. Jens, I mean, we do sometimes forget, because the market participants are not virologists, that of course this all depends on how we keep a handle on the pandemic. And there are a number of things I know that you've been studying, trial data, also some steroid data to see, how you can stop people from getting so sick that they could end up dying. But what kind of recovery or what kind of pattern do you see in terms of lockdowns and the health questions?
Well, so I think we're already seeing a dramatic ramp up in the vaccinations. Like, it's not fast enough. We all want to get the vaccine in one day and be over with it. So it takes longer than that. But relative to where we were in early January, like in the US, we're like way above 1 million per day, right? And we started with a couple 100,000 per day, so that's improved a lot. In Europe, it's been very slow. So we have a little bit more than 500,000 per day. And it's not a lot, but we've just started to deliver the Oxford AstraZeneca product in the last week. That's not in the data yet. And then we have this huge question mark around, okay, can BioNTech and Pfizer produce a lot more in Germany in a facility that's supposed to open on February 15? So we think there'll be a big ramp up in essentially how many people get it in Europe. And if that's the case, then I think hope for policymakers that we're turning the corner will be totally different, and then the reopening will start to be discussed. We already had some comments from Merkel yesterday that suggested that she wants to reopen in early March. So that was a bit of a change in tone there. And what has been holding back policymakers is that they're very worried about the different strains. So I think international travel will definitely be very restricted for a long period of time, but it doesn't mean that the services sectors are gonna stay closed forever. I think there's a real desire now to get the hospital pressure under control, see the vaccine rollout speed up, and then reopen those services sectors that have been shut now for a couple of months.
Jens, what does it mean? I mean, so if you're Jay Powell, if you're from the Fed, is the underlying message that actually they're going to be behind the economy until they can have a cup of coffee in person with Dr. Fauci, because it means that we'll see the tail risk of the pandemic die down?
Well, I think in a way they kind of have a cup of coffee already, right? Because this forward guidance that they put in place in August, the average inflation target, it's really a quite dramatic thing in the sense that it's realized inflation that now matters, and the way they've communicated how they're going to implement it, right? So in past cycles, you always had different FOMC members that were sort of forecasting, okay, when are we going to recover? And then preemptively, you want to do something about policy. In this policy framework, it's almost like you've decided to sit back and say, we are going to wait until the realized numbers are going to hit a certain target, and it's only then we're going to consider doing something. So the forward guidance is much more powerful, and it doesn't really matter what each FOMC member is doing. And all Powell has to do is just to reinforce that, so we don't have the market getting confused about how preemptive they're going to be, because they're not going to be very preemptive at all. And that's really important to what we talked about earlier. The short end is anchored, not just because of the liquidity injection that's coming in now from these release of government deposits, but also because you have a situation where the Fed guidance is really just a lot stronger than was any time earlier. Like, I get questions all the time about tapering. Oh, we're going to have a mini tapering tantrum. But the short end is just anchored in a way where we can't have a tantrum like we had in 2013. So it's a very, very different cycle.
Jens, I know this is a longer-term question, but maybe one that we need to, start trying to think about sooner. So everything that the Fed is doing is also on the premise of, the special status of the dollar. Does the China actually, manage to stop the dollar from being a reserve currency quicker than we think? And does that change actually the dynamic of fiscal and monetary policy in the U.S.?
So China is doing a lot of structural things that are aimed at creating a reserve currency. They've done a lot of things in the bond market that has finally attracted a lot of money into their government bonds over the last year. This is the first period where we've seen that ever. So they're doing that. They're also doing stuff in the technology space So we have a public blog that's called Money Inside Out, where we wrote about this recently, that really the creation of a digital yuan is something that they also view as being part of creating a reserve currency. So there's a lot of steps in place that are strategic steps that they're taking to really create a competition towards the dollar. And you can also see it in terms of how the Chinese currency is trading. When we have volatility in the market, it's typically the case that the dollar strengthens against other currencies. But that's actually started to be very little against the Chinese currency. So the Chinese currency is also behaving a reserve currency like there. So we're on a very interesting path. And over time, that could create some competition for, demand for U.S. assets. That's not going to happen next week or next month. But over a multi-year period, that is increasingly something that will be a competition for that capital. There's no shortage of capital around the world now, but if we go into a more normal cycle, that could become relevant.
Jens, thank you so much for the robust conversation. Jens Nordvig there, Exante Data founder and chief executive officer. Now let's